And welcome back to the Morning Blend with our continuing series, Transparent Mortgage Solutions with ProVisor. Well, over the last couple of weeks, the stock market has been extremely volatile. So how does that affect mortgage loans?
Lots of ups and downs, right? Joining us now to explain is the president of ProVisor. It's James Mercado.
Good to see you.
Yeah, we've talked about this, and people losing sleep over the ups and downs of the market and the volatility.
Yes.
And I think people also are talking about the coronavirus and wondering how that affects rates.
You know, that's been a big question. People are like, what does that have to do with my home mortgage? And ironically, it has a lot to do with it because the markets, as everybody's noticed, is freaked out right now. So when the stock market goes down, people panic. So then what happens is investors take their money and they put it in the safest, in my opinion, the safest investment in the world, U.S. Treasuries. And that affects bonds. And what that means, rates go down.
Yes, it's right. It's like gravity, right?
Yeah, right. Kind of bad and good at the same time. I don't know.
So the Fed's cut the interest rates by like a half a point.
So that was unprecedented and surprised everybody. And that's the largest cut since 2008.
Yes.
Whoa.
So how does that affect mortgage rates?
Well, here's the bad news. If it doesn't affect mortgage rates. So everybody, because our phones are blowing up, my rate goes down to half. No, it doesn't. When the Fed cuts the federal funds rate, it affects your prime rate. Car loans are going to be a half a point cheaper in the next couple of weeks. Credit cards are going to be cheaper. Commercial lending's cheaper. But your mortgage rate is not cheaper. Because the reason is they're trying to get investors to spend more money in the stock market saying, hey, we got this under control. And when they do that, they put less money in the bonds, and then rates usually tick up a little bit. So we'll see what happens. It's been pretty volatile right now. They're hoping to stabilize the markets this way, but interest rates actually plummeted, and now they've kind of ticked up a little bit.
Okay, I know you've been doing this for more than 20 years, so you've seen a lot of ups and downs. You've seen bear markets, bull markets, a little bit of everything. Historically, where are we at? How do you see this in comparison?
That's a really tough question because the thing is, what you see is it's been a roller coaster of emotion just this year alone. So what we're seeing is with this whole coronavirus, no one predicts that stuff. And it panicked the markets and interest rates plummeted. And now is the time, if you own a house or a condo or a duplex or an investment property, now's the time to refinance that property because rates are historic. Lowest I've seen in over 15 years is today, right now.
Wow.
Whoa.
So don't panic, but think about refinancing.
Right. Don't panic. Your 401k will come back. All right. Don't panic on those investments. But take advantage of the low mortgage rates and refinance now.
Okay.
I always wonder too, when people make a phone call to your office, what should they expect? Because some people have maybe refied many times or they've bought multiple homes over the years. Some people are newer to the process.
You know, we had somebody call yesterday and says, I've never refied my house before. I bought it in 2004. I don't even know what to do. And we get so prone because we do this every day. It's like, oh, well, yeah, blah, 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 blah. Slow down and refresh your memory. The first thing you need to do is talk to a local person. So we're an independently owned company. We are a mortgage broker. We're a mortgage banker. We have both licenses in the state of Wisconsin. And the difference is that we are able to take that client and place them with the best loan available. We don't have all these overheads, all this overlay. We're not subject to just one bank's rules. We have lots of options. What does that mean for the consumer? Lower rates, lower fees.
Can you do it fairly quick?
Yes, we actually closed a loan. Now, my staff's going to kill me for this. We actually closed a loan in 15 days.
Wow.
That's not the norm.
They're like, no.
Right now, my staff's watching like, no. We could do it if it was an emergency. All right, but the absolute fastest you could ever close a loan would be 8 days with compliance, legal, all that kind of stuff. But normally it's 30 to 45 days.
30 to 45 days.
If people call you and they mention seeing you here on the Morning Blend, you say that they can have a no-cost consultation and no application fee.
Right.
So they can review their situation and talk to you, whether they're thinking about selling, whether they're thinking about buying, or if they think maybe now is a good time to refinance. You can let them know if it's a good idea.
Yes, we'll bring you in our office if you want to, or we can do it over the phone. But yesterday we had a young couple from Germantown. They thinking they kind of outgrow. They got 2 little kids and they have 1 bathroom and it's all boys and the wife wants her own bathroom. And we just talked for an hour. And said, this is what it looks like. Here's what it does if you refi. Here's what it does if you sell. Here's what it's going to look like if you buy. And we just did that, spent an hour and a half with them. Didn't cost them a nickel, no commitment on their end. We want to educate the consumer. We want to have them feel empowered to make a good financial decision.
I love it.
Take advantage right now. There's that no application fee and no cost consultation if you mention that you saw James Mercado here on the Morning Blend with ProVisor. The phone number to call is 262-754-4444, and you can visit online at provisor.com. Again, you can meet in the office or you can talk over the phone as well. Thanks so much for being here, James.
Thanks for having me today.
Good to see you.
Appreciate it.